So I will start, and this session will be recorded, okay, for the reference purpose, and for those who will come and join later, we will have the recordings made available for everyone. Okay. All right. So as a disclaimer, what we're going to discuss here is for educational purpose, and it's not a financial advice. So if you want a financial advice, maybe you can seek advice from financial advisor. Okay, so I will start by iterating the agenda, what we're going to discuss today. All right. First of all, we will have an introduction. Then we will discuss trading strategies. After that, we are going to now work on building the bot. After we build the bot, we will now call it quits. Okay, by giving the session for Q&A. So, uh, to begin, I would like to welcome all of you for attending this workshop and for taking your time to attend this workshop. Um, and then I would like to also introduce myself. Yeah, please can we try to mute so that we do not disrupt the session. All right, thank you. Okay, so welcome, and my name is Abubakar Sana Ali. I happen to be a PhD holder in the area of electrical engineering, electrical and computer engineering. I have worked with machine learning and AI for the past 5 to 6 years. I have applied AI in different sectors, in different fields, ranging from communications, operations research, and now also I'm doing some works related to financial market and the financial sector. I did my PhD here in the UAE with Khalifa University, okay, which happens to be the best university here and the second in the region. I also did my MSc from University of Leeds in the UK. I also did my bachelor's from Bayero University, Kano. This is in Nigeria, back home. So the company, when we started, we went back to 10 years ago, actually. That's only 10 years ago when we started as a small agency where we provide services related to digital marketing, web development, and design. We also provide things that have to do with electrical services design and the likes. But then over the years, we had different iterations and things happen along the way to what brings us to what we have now, where we have the company registered here in the UAE, and this is as a product of my doing my PhD here. So after I graduated from the PhD, I set up this company here, and I'm offering different types of services such as consultancy, training, and workshops, as well as research and development. So I have worked with different companies. For example, I work with TII. I don't know if you know that company. Yeah, they are one of the companies that made that famous large language model, and also the current supercomputer that works here in the Middle East. Not only that, also they have a quantum computer. So yeah, it's kind of one of the top research institutions here in the Middle East. So I've worked with them. I've also done some works with my advisors while I was doing my PhD for different companies. So in essence, we try to see if we can help our clients build solutions that are digitally oriented and that will enhance and streamline their operations. Okay, so this is about me and about the company. I don't know, maybe we can open the floor for others to just write their names in the chat or tell us a little bit about yourself before we talk about the goals. I hope you can still hear me. Yeah, you can send a message in the chat if you have challenges speaking. Okay. So as I said, we are going to record this session for those who will attend late and for those who will want to have a recap of what was discussed during the session. So what we are going to learn in this session, first of all, our main goal is to build or create a trading bot that can be able to execute trades. And we would like to do this without writing a line of code. Okay. The second objective or goal of this workshop is to see if we can have an understanding of the role AI plays in automating trading strategies. So without further ado, we would like to start going deep into the uh, content of the workshop. I hope I am able to carry everybody along. I hope I'm not going to go fast. Okay, so trading. What is trading? Okay, uh, and not only that, we need to understand also what is a market, as well as some key terms related to trading and the financial market. So starting with trading, for those who are new, trading is the act of buying and selling or exchanging financial instruments, and it is done mostly with the intention of making profit from price movements. You can conduct trading in different markets, for example, the stock market, forex market, crypto, commodities, and so on. And this market that I was talking about, okay, it comes in different forms, and it is a venue where traders, investors meet to buy and sell assets. It is governed by the forces of supply and demand. I'm sure this is something familiar with all of us. Supply, the law of supply dictates that the higher the supply, the lower the price, and the law of demand dictates that the lower the demand or the higher the demand, the higher the price. So this is what governs these financial markets. Although these are some laws, but each market has its own behavior. For example, the forex market doesn't behave in exact manner with the crypto market, and the crypto market doesn't exhibit the same properties of the stock market. So each market comes with its own technicalities and intricacies. So it's important to understand how each market is affected by the movement. Okay. And then when it comes to some of the key concepts that we're going to be talking about, first of all, we need to understand something called bid price. Okay. So when you hear the term bid price, we're talking about the highest price the buyer is willing to pay for a security. And when you hear the term ask price, this is the lowest price a seller is willing to accept for a security. And the difference between these two, okay, let's say for example, the buyer is willing to buy at most, okay, the max he is willing to buy, let's say Tesla stock is 200, and the seller is saying, okay, the least I can sell is, let's say, 210, for example. So the difference between this 210 and the 200 is what is called the spread, and that is $10, for example. Okay. The bear market, we're talking about the condition of the market where prices are falling. So if you have prices going down, that is what is called the bear market. And the reverse of it is the bull market where prices are going up. You will hear also of the term short selling. Okay, when we say short selling, this is the art of borrowing a security from the broker when you know that this security is going to fall in price. So you borrow the security, and once your prediction comes true, you can now buy the security at a cheaper price and then give it back to the owner. What I mean is, for example, you know, okay, currently Tesla is selling at 200, for example, and you predicted that by next week Tesla is going to become 150. So it is going to lose $50. Okay. So what you want to do is you go to the broker, tell him, okay, can you borrow me 10 shares of Tesla? Okay, he will give you, okay, take 10 shares. So you will give him, he gives you 10 shares, and you tell him, I will bring back your 10 shares to you. You go now in a week, it has dropped by 50. You buy 10 shares from other people, okay, and now it is going to be 150 for 10 shares. That is 1,500. So you just use 1,500, get 10 shares, give it back to him. When you got it at 2,000, because 200 times 10, that is 2,000. You already made $500 profit. So by doing this kind of transaction, this is what is called the short selling. Imagine this is the act of borrowing more to be able to make more. For example, you have money, let's say, to buy 1 share of Tesla, $200, but then you have made your prediction that Tesla is going to increase. So you can go and borrow money from the bank, let's say, give them the $200 you have as security, borrow $2,000 from them, come and buy Tesla. So now you can buy 10 shares instead of 1 share. With the money, once it skyrockets maybe to 250, you are able to make 50, So you have like 500 now. Instead of making maybe just $50, now you have made $500. Stop loss order. This is a type of order where you try to enter the market and buy a product or an asset if the price reaches a certain value. Okay, let's say you want to buy Tesla, and always we use Tesla as an example. Okay, and you predict now the current price is $200, and you are predicting that Tesla is going to go to 250. Okay, so since it is now 200, you would like to have a confirmation that it is really going to be increasing. So the moment it reaches 210, you now buy Tesla. Now you have confirmation that yes, the price of Tesla is going to be increasing. So this type of order that you place with the broker, telling him, okay, wait, don't buy yet, wait till it reaches 210 to confirm my prediction before you buy. So this is a stop loss order. Algorithmic trading, which is what we're going to discuss later, is the art of using the computer to automate our trading operations. Technical analysis, this is when you use some technical indicators so that you will be able to analyze the market and make your decision. Fundamental analysis, on the other hand, takes into consideration the real fundamentals of the company. For example, let's say, as I said, Tesla, we want to look at their records, look at their financial statement, look at their balance sheet, see are they profitable or not. Not only that, are they growing or not. So these things, based on this, you make your decision to buy Tesla or not. This is a fundamental analysis. Portfolio diversification, this is the art of spreading your wings. This is what we normally say, don't put all your eggs in one basket. So you have your money, buy so many different things so that you reduce your risk exposure from one stock. Maybe Tesla will fall. If you have all your money in Tesla, then you've lost it all. Okay, so now to the components of trading. We have 3 components. If you're going to trade, keep these 3 things in mind. First of all, we have the strategy, we have the psychology, and we have the management. When we talk about strategy, these are some set of goals you define. And this is something that is always going to be automated. Okay, that is why you are going to trade. You need to have some set of rules that this is why I'm buying this stock, this is why I'm selling this stock or this asset. Why do we need set of rules? Because we want to make sure our own activity is consistent. For example, even yourself, you can say, okay, my own set of rules for going out and making purchases is when my fridge is empty. So my fridge is empty, that is my indication to go and shop. Okay, how do I go and shop? Maybe I will hail a taxi. After that, I will go to the shop, get my stock, come back and restock my fridge. This is my set of rules. So this set of rules, we would like to have them well documented. Otherwise, if you are just trading without these rules, it's not different from just gambling. You are just trying your luck. Okay, and depending on the type of market, these strategies will differ. They keep varying. It's not going to be consistent. It's not going to be constant because each market operates differently, and it is, as I said, essential for having consistent trading. Then we have what we call the types of trading strategies. Okay, as I indicated earlier, we have a technical analysis. This is where we use systems where you have these indicators to help you make your decision of purchase or sell. You have fundamental analysis. Here, what do? You look at the fundamentals of the company, look at their balance sheet, their financial statements, see whether the company is really growing or not. Look at the management. Who are the people managing this company? Look at the news. Is there anything good about this company, or the sentiment of people about the company is bad, it's negative? So based on that, you make your decision to buy the company stock or not. Quantitative analysis, this is the strategies where we use some mathematical modeling as well as sometimes statistical modeling to make some predictions. Similar to it, we have the machine learning. The difference is that machine learning mostly is used for pattern recognition and execution. So you do not have to come up with your mathematical models. You allow the machine learning to be able to come up with those models on its own. Okay, you do not have to use technical analysis to put tell it this is what to do, this is what to do. No, you allow it to recognize patterns on its own, then make predictions on its own based on the patterns it recognizes. This is why people like machine learning, and this is why it is currently in high usage in the financial sector. Okay, so the next part is the trading psychology. Okay, I hope I'm not going fast. Yeah, am I going too fast? Because of course I know these are some fundamentals. Some of us are very much familiar with this, so I'm trying to go over them so that we go into the workshop. Okay, so the trading psychology. So this is the thing that had to do with the emotional impact. Okay, things that had to do with fear, greed, hope, regret, and things like this. So this depends on our mental state when we are doing and executing trades. So we would like to have a situation where we will have zero emotions involved when making trades. Okay, you should not be afraid to take to make a trade. You should not be greedy. Once you reach your target of profit, take it and go. Don't stay longer than you planned. Don't be hopeful, thinking that something that was going wrong, okay, is gonna go the other way in your favor. And also avoid regret, so that you don't regret your previous decisions or of not buying or selling a particular asset. So based on that, it is actually one of the most important components of trading. Okay, and if you can be able to put these 4 things in check, you will likely become profitable as a trader. It was concluded by some research work that trading psychology contributes to more than 80% of your success or failure rate you are trading. Many people tend to fail, and many people do succeed in trading because of their own emotional state while trading. So this is very important, and this normally comes with time, because at a start you might not be able to have the right psychology to be a winning and profitable trader, but with time, with practice, you will develop psychology that fits your own personality. We have different personalities, so our psychology will differ. So the last component out of the 3 is the trade management, and this involves things that have to do with the risk management, capital allocation, performance tracking, and stuff like that. So we like to see if we can come up with like a trading plan, which we will now be telling ourselves, okay, for me, if I make money so amount, I'm okay, I will go, I will stop the trade, terminate the trade, and take my profit and go away. If I lose a certain amount, I will take my loss and go away. I will not be hopeful. And for every given trade opportunity, I'm not going to allocate more than a certain percentage of my total capital. So these are all the things that you need to have when you are trading. Okay, so these are the three components. So now this is important. We're talking about management best practices. Okay, we have something we call the trading plan and position sizing, as well as the risk reward ratio. Okay, so we want to have a trading plan where we stick to it, try not to deviate from the trading plan. The position sizing, we don't want to have a position sizing very big to the extent that we are going to blow out our account. And the risk reward ratio, we want to have it to be meaningful to the extent that we know what we are taking in terms of risk and reward is worthwhile. We are not just trying things without any prospect. Okay, so now we are going to start with the algorithmic trading. I hope I didn't take much time in the introduction. I believe some are beginners, so I wanted to see that we covered some parts so that we do not have many questions later on. Okay, so algorithmic trading. Okay, we're going to look at it and what it is all about. So as I said earlier, we are going to use computers to execute trades, and we're going to do it based on timing, price, and quantity. Okay, not only that, our aim is to see that trades are executed at the best possible prices with the benefit of reducing the impact of human emotions. As I said earlier, psychology contributes to the highest impact of success or failure. So if you are able to reduce your emotions, then you should be able to expect the winnings and profitability to increase and improve. And compared to the traditional trading, here we don't do things manually. Not only that, we have the speed factor where we have machines for executing trades way faster than humans. We can have complex strategies that can work in our favor. Not only that, we can do things in very, very high frequency, like milliseconds. And these are some of the things that the trading bots bring to the table: provides efficiency, speed, consistency, and discipline. Not only that, we can have our risk management without any bias. We can backtest. Backtesting means the art of trying our strategy over historical data. As a human, if you come up with your strategy, you cannot go back in time, but the machines can go back in time with the historical data to see how the strategy works. Scalability, in the sense that you can have the trade with the bots working on different types of markets, different types of assets simultaneously. You on your own, maybe you can only monitor 5, 6, 7, maybe at most 8 assets, but with the bot you can have them monitoring 100,000 different of assets at a time. Okay, so some of the strategies that we normally automate include mean reversion. This is a strategy saying that, okay, when we have our own asset, if it is going up, then we expect that a certain condition will happen for it to come down. Okay, you have momentum trading. Here you said, okay, when I see something going up, I will also like to follow the trend and follow the direction of the trend, that okay, let's also go up. You have the arbitrage. Here you try to exploit price differences of the same asset across different markets. Machine learning, as I said, tries to predict price movements. You just give it huge data. Based on this, tries to come up with different predictions for you. Natural language processing. This is an additional type of automation where you have these bots that can be able to read news, for example, read social media posts. Based on that, try to get what is the market sentiment. Are people happy about Tesla or not? If they are not happy, then it's not good to buy Tesla. Or if I already own Tesla, it's now the right time for me to sell because people are not happy with Tesla. So this is what natural language processing can do. Scalping, this is the art of getting in and out of trade very fast. You spot an opportunity, you want to go in quickly, grab some small profit and get out. So the idea is to do this as many times, as numerous times as possible. If you have a bot, it can do maybe this kind of thingy, let's say hundreds of times in a minute. And as a person, you can't do that. All right. So now we will start with the step-by-step, okay, demonstration of building a simple trading bot. Okay, so now if you have your laptop and you have your computer with you, you can also start your laptop. Okay, you can now follow the steps that I'm going to iterate here, and you will also be able to build your own trading strategy and your own trading bot. Okay, so are we together so far with the fundamentals? Okay, so now moving on to the building of the bot. First of all, we need tools to build anything, right? There has to be tools if you want to build anything. We are going to use 4 tools here for us to be able to build our bot. The first tool is Google Bard. Then we will use Google Colab. We are going to use Python libraries. And finally, we are also going to have Alpaca API. All right. So why am I going to use Google Colab? Well, Google Colab, or let's start with Google Bard first. So Google Bard will help us build custom trading strategies without us having to write a code. All we have to do is to define to the chatbot what we want it to generate, and it will get us executable codes, which we can now use for our bot creation. If you want to open Google Colab, just Google Bard, go to Google and type Google Bard, or you can type bard.google.com. Maybe let me add this to. Yeah, just go and type bard.google.com. If you do that, you will be able to get the link. Okay, you can get the link, which you can now register. It's free, and it will open a screen for you. If you have Google Bard set up, the next is Google Colab. Google Colab is a cloud-based Python programming language, okay, environment, Python programming environment that allows us to execute our codes, okay, and simulate our codes. Okay, so you can also use it for free. You do not have to pay, and you can do backtesting. You can also automate your own strategies so that they will be working automatically. The Python libraries we normally use for building our bots include pandas, NumPy, matplot library, yfinance, technical analysis library, TA library, scikit-learn, TensorFlow, PyTorch, and OpenAI. So we use these libraries to be able to build our bots. Depending on the features and the functionalities of our bot, we will be using some or we will be using all. Okay, Alpaca API. So once you have your bot created, you tested it, okay, you will like to now deploy it in the real market. To deploy it in the real market so that you will be able to be executing trades, okay, live in live trading environments, you will need to have access to a broker. Alpaca is a broker that provides APIs which will be connected, okay, to your bot. So you will have your bot communicating to the Alpaca trading platform via the API. So the API will serve as a bridge. So what we are going to do is to try to create this bridge so that our code in Python can now be communicated with the trading platform so that we will be executing trades in real time. Okay, so we are now done with the tools that we want, and all of these tools, as I said, are free. You can go and download these tools. Some of them are just web-based. Actually, most of them are web-based. Only the Python libraries that you need to install, download and install, which you will see how this will be done for us by the Google Bard will tell us how to do that, and it will do it for us. Now that we have the tools all ready, the next thing you need to do is to have an idea of what is your strategy. Okay, we need to understand the strategy, how we go and what we are going to automate in the first place. First of all, every bot or every strategy will come up with these three components. First of all, it will have what we call the signal. This tells you when and where to take a trade. When, especially. If, for example, you consider this signal as the traffic indicator or traffic signal, when you see red, it means stop. When you see green, it means go. When you see orange, it means this is a warning, right? So you can consider a signal like that. So we like to spot a trading opportunity that will tell us to buy Tesla, for example, because there is an indication that Tesla is going to rise in price, so we like to buy Tesla. Or it will be red telling us to sell Tesla, or that is, for example, go and borrow Tesla stocks because Tesla is going to fall in price, so that when it falls, we buy it back at cheap price and pay it to the guy we borrowed it from. Or maybe not to do anything. If there is no opportunity, you see the orange, don't do anything. Okay, that is the signal. So you will have this thing that gives you a signal. Then the order type, this tells you whether you need to do a market order. Am I going to buy now? Oh no, it's supposed to be a limit order. Okay, Tesla is 200 now. I would like to buy it when it comes down to 190 because I know it is going to go back to 220, so that it will have a good soft profit from 190 to 220. That's $30. If I buy it now to 220, it will just be $20. So I would like to make sure that it comes down. That is the limit order. Stop order is to make sure that your prediction is right. So Tesla is 220, for example, and I would like to see, okay, let me buy it when it reaches 205. Now it is 200. When it reaches 205, that is an indication that yes, my prediction is right. Tesla is increasing in price, so I buy it. So these are the type of orders. So you will also want to tell your bot what type of order it should be making. Okay, because if you get the signal opportunity telling you, okay, this is a good trading opportunity, then should I buy now? Should I buy later? When should I buy? That is the next thing. That's the next question. Okay, now you have bought. You are now an owner of Tesla stock. The next question will be, okay, when do I sell? Should I hold on to Tesla forever, or there should be a level where I will sell? And that is where the risk management comes into play. You want to see, okay, I buy it at 200. Once it reaches 220, I'm going to sell. So that is my take profit. That means my prediction is right. Tesla is going to increase. The moment it reaches 220, I'm selling, taking my $20 profit, I'm going home. Or if I am wrong, Tesla is actually going to fall instead of what? Increasing, then I will say, okay, the moment it reaches 190, I'm selling. Okay, I will take my $10 loss and go home. No problem. So that is my stop loss. So with this take profit and stop loss, we already know when to exit our trade. Okay, the position sizing is all about how much percentage of my current capital should I use to buy this Tesla stock. Should I use all of my money? Should I use 50%, 10%, 1%? How much percentage? So that is what the position sizing will be. So if you're going to design any strategy, make sure these three things are there. Make sure you have defined the signaling system. Make sure you have defined the type of order, and make sure you have your risk management in place. Okay. So with this stated, now let's look at let's follow this framework to design our bot. Okay. We will start with the engulfing bar pattern, and this is going to be our strategy for giving us an indication whether to buy or to sell. Okay, so this will be our signal, the red, green, and orange. Okay, so look at this. I think it is best if we use visualization for this. For those who are not familiar, this is what we call a candlestick. Okay, there are two types, mostly the red and the green, or you will see red and blue, or you will see white and black, or you will see filled and hollow. Okay, so any one of these different visualization you see, they are always talking about the same thing, where the red is always what we call the bearish. Okay, it's always the bearish candlestick, and the green is always the bullish. So this here is the bearish, for example, candlestick. Okay, and this one is the bullish. Okay, bearish in the sense that when it opens at a higher price than when it closes. So assuming we are talking about Tesla, we buy Tesla today, Monday, at 8 a.m. the market opens, and Tesla price is at $200. Okay, the market closes normally at 4 p.m. Let's say at the time the market will close, Tesla becomes $180. So that means Tesla has lost, has fallen. It has fallen for the day. For that, we normally represent this kind of activity in red or in black. Okay, and the open, that is this 200, that is the open price. Okay, this 180 is the close price. It is what is indicated by the candle body. This, what we call upper shadow and lower shadow, these ones here. Okay, this one tell us the fluctuations of the price during the day. So between 8 a.m. and 4 p.m., the Tesla price could have rise up to maybe 220. Okay, and it has fallen up to maybe 160. So this is the low of the day. The lowest value, the Tesla stock price is the low, and the highest value is the high. So the low here is 160, and the high here is what? 220. Okay, so this is what we have. And we have the bullish. The bullish, as you can see, is the opposite of this one. It's like saying, okay, when Tesla started to trade at 8 a.m. it is 200. By the time it closes at 4 p.m. it is 220. So we have bullish. So this is the open, this is the close. The open is less than the close, but during the day it rose up to, let's say, 240, and it had fallen up to, let's say, 180. So let's say this is 180, this is what? 240, and it opened at 200, and sorry, it opened at 200 and closes at 220. Okay, so this is Tesla for us. This is what happens. So this is a candlestick. So we're going to use this same concept to be able to get our signal where to buy or where to sell. All right, so when we have a pattern looking like this, where our previous candle, this is the previous, and this is the current. Okay, so this candlestick could be of different time period in the sense that one candlestick could be telling you of the trading activity over one day, or it could be telling you what is really going on over 1 week, sometimes even 1 year, sometimes 1 month, sometimes even as little as 1 minute. You can have a 1 minute candlestick. That is what happens at the beginning of the minute and what happens at the end of the minute. So if you have something like this, you have smaller body where the previous minute, let's say the previous minute, it was a bearish, that is, we bought it at a higher price, and by the end of the minute it was lower price, so we get a red one. Then the current now, the current, this is the current. So if you can see, the current is engulfing this one. So it's as if saying that the current can even take the whole of the previous and swallow it. That's what we call the engulfing pattern. Okay, so normally engulfing pattern okay, tells us about reversal or trend. Okay, so since this is bullish, this is white, so that means it is telling us, okay, those who are buying are stronger, so let us also buy. Let us buy because of this pattern we just noticed. So this is our signal. So once we see something like this, we say, okay, we have the signal to buy. If you see the opposite, where let's say this is white, okay, this is white, and then this is red, okay, or this is dark, so that is the bearish. Okay, it's telling you, okay, let's sell, let's borrow Tesla stock and sell. Okay, so this is the engulfing pattern. Now we are done with the signal, and I will show you some presentation here, the real life market. I don't know if this is clear. Okay, can you see this part here? You can see this is a red candle and this is a white candle. So this is telling us, let us buy. We have a buying opportunity. Okay, let's look at the second one, this one. So as you can see here, here. So you can see from this one, for example, the black can be able to swallow the white. So the black is bearish. Also here, yes, keeps appearing. So this is called the engulfing pattern. Alright, because it depends on how you define it. You can relax it, or like this one here, completely swallowed. Here you can see some of the tail is trying to escape, so it's up to you. Like even here it has escaped a bit, so you are the one who will determine how much the intensity of the constraint is going to be. Okay, so this is the engulfing pattern strategy. We now have our signal. So after the signal, what do we do next is to determine, okay, now that we have the signal, when are we buying? Should we buy now? Should we buy 5 minutes later, or should we buy when the price reaches a certain value? In our case here, to simplify our strategy, we are going to use market order. That is, the moment we spot this opportunity, we buy. Okay. All right. So now that we have defined the signal and we have defined when to buy and how to enter the trade, the next thing is to determine how to exit. When are we getting out of the trade, which is the risk management. Okay, so the risk management we're going to apply is also going to be an easy one. So we would like to see the difference between this guy. Let's call this the range. Okay, which is the difference between the high of the previous and the low of the previous. So let's say, as I said, this is Tesla stock. The high for the previous day is 200 and the low was 180, which means the range is what? Is 20. Okay, so now that we know the range, and let's say here I bought it at this current price of the 200. This is where I'm buying 200. I am buying here. So I will say I'm going to take my profit. I'm going to take my profit when my buying price, let's call it price, is equal to, okay, when I add this range, which is the $20. So that is to say my TP is going to be what? 220, right? Stop loss. Also, I could do different. I can say, okay, when my price is reduced by the range, which is 20. So that means if the Tesla falls to 180, take my $20 loss and let me go home. Okay, so this type of risk and reward ratio, I'm getting 20 and I'm willing to lose 20. So this is what we call 1:1, right? This is 1:1. There could be situation, and this is always the best practice, try to see that your risk to reward ratio is at least 2 to 1. Okay, you want to see it to be at least 2 to 1. That means I would like to make this range times 2, so that my TP is going to be 200 plus 40, which is going to be 240. So when I am right, I make $40. When I am wrong, I lose only $20. Okay, so this is my own strategy for risk management. Lastly, we have the position sizing. That is, now that I have spotted the opportunity, how many percentage of my total capital should I use to buy? Let's say 5%. I don't want to go above that, because anything more than 5% is considered too risky and is not considered as a good practice. So let's say if I have $10,000 and I spot a very good trading opportunity, I can put up to $500 into that trade. Okay, so now we have designed our signal, how to enter and when to enter. The last thing that you need to do once you do this is to automate. Okay, to make sure this order execution is automatic. It is done based on a schedule. Maybe you want to be using your bot once in a day, so it checks for opportunities in the morning at the opening of the market. If it spots an opportunity, it buys or it sells. If there is no opportunity, it goes back and sleep till the next day. It will check again. All right, so you want to set this schedule. I will show you how to do this. Okay, so we have explained the strategy which we are going to automate now. The next thing is to build this bot step by step. Okay, and I'm going to follow these 4 steps here. I'm going to use 4 prompts for each of these steps. Okay, so I will start with the first step, building the strategy. So keep this, you can write them down. Okay, build trading strategy. How we're going to do this? Then we are going to test it first. After we do the testing, we will now connect to live market. After that, we would like to execute trades in the live market. Okay, so if we are all together following along, you can, yeah, I will stop this. I will switch back to my browser where I have those tools ready. Okay, so for the sake of time, I can provide you with uh, the same prompt I added to the Google Bard, and you can write the same thing in your Google Bard. It will generate the code for you. Then you copy it and paste it in Google Colab. Okay. So the first prompt I did was to define all these things that we've discussed previously about the strategy. I talked about the strategy, which is the engulfing pattern. Then I talked about how to enter the trade, which is of course market order. The moment we spot the opportunity, we take the trade. I also talked about the risk management, how I intended to exit or enter the trade. And finally, I talked about the position sizing. How much percentage of my total account balance should I use to place the trade? Okay. So as you can see here, I told it, I want to build a trading bot, okay, that uses an engulfing pattern strategy to trade Tesla stock in Colab. The details of the strategy are described as follows. I told it, okay, the strategy is like this. Look for a small candle followed by a larger opposite candle. In bullish engulfing, the second candle closes above the first, whereas in bearish engulfing, it closes below. Use this as signal for entry or exit points in the trading strategy. The type of order, I tell it should be market order. At the moment we get this signal, we buy. How I intend to manage my risk? Buy when the signal is the bullish engulfing pattern. So when we see the bullish engulfing pattern, we buy, and sell when the signal is the bearish engulfing pattern. Then the TP is going to be our price, how much we bought it, plus our risk reward ratio. I told you earlier, I was willing to make $40 if I will lose 20. So my RRR is 2. The range is the difference between, as I indicated earlier, let's say $20. So this is the range. And I told it what this range is all about, where the range is the absolute difference between the high and low of the previous candle. Okay, that is the small candle. And the RRR is my risk reward ratio here. I'm using 2. The stop loss is at order price minus the range. So if I know the range, the stop loss is at the order price minus this range. Okay. The reverse was stated for the selling, and I also told it the position sizing 5% of my account balance. Okay, so I will send you this in the chat. You can paste it in your Google Colab. It will generate the code for you. You don't have to understand coding. All you have to do is to paste this. Okay, this is too long. Okay, paste half of it. Okay, so that is the first prompt, and this is what, based on what I said earlier, this is the first step, building. Okay, so you can try this. If you try it, it will give you these codes. It will start, of course, maybe not exactly like this, but it will be almost the same. So it will start by installing the libraries, and this is what I talked about among the tools. You will install the libraries you need for this to work. After it installs the libraries, then it will try to import these libraries. Okay. After that, it will load Tesla stock, tells it the period, the dimension, X some visualization, and then you have some codes here. So I copied this, and it even explains to you what this strategy is all about. You can see the image here, it explains it all. And yeah, so this is the first prompt, and I can show it to you here. I ran the same thing that you saw there without any modification, the code it gave me. I ran the first code to install all these requirements, installed them. I imported I did the imports from the libraries, set the Tesla, and then I made the visualization. So this visualizes how Tesla works. You see the pricing of the Tesla. Added this additional code that it provided. Okay, so that's the first step. You can try it also. Then after that, the next thing was I tell it, okay, now that we have tested, okay, we have finished with this first step. We are moving to the second step. Is we are going to test our trading strategy. Okay, so how do we test it? I told it I want to test the strategy using Y Finance data. Assuming my current account balance is $10,000, I want to know the total return after 2 months. And I want to print the number of times I buy, the number of times I sell, and the number of times I do nothing. So if you have this information, said okay, it designed the engulfing pattern. So this is going to tell you when to buy and when to sell. Assuming we don't know code, gives it to you. I will copy it and paste. I'm not going to write this code or do anything. Then I have this also. This is to test and track the statistics. Okay. So I did that. Okay. Copied everything. You can see it engulfing pattern. I copied this one. I ran it. So it told me something here. It bought at 253. It sets the TP, which is the take profit, to 254, and it sets the stop loss to 253. So this is the risk management. Okay. And I printed the statistics, the total trades made in these last 2 months. Okay. In the whole of 2 months, I was only able to make only two trades, because only two trades were able to be identified, only two opportunities that fulfilled that my criteria. So only two trades were made, and the two trades are for buy, no sell, and 1,947 times that we checked, nothing happened. Okay, so if you look at it in 2 months, and I think this is a 15 minutes. Yeah, I told it 15 minutes. So how many 15 minutes do you have in 2 months? You can do the math. You'll have around 2,015 minutes. So after every 15 minutes, it checks, is there an opportunity to trade or not? Is there an opportunity to trade or not? And it shows that out of this, only two opportunities for trade were identified, and the two of them is for buy. And look at the total return after 2 months. I was able to make 5,250,500. Of course, this could be just a beginner's luck. Yeah, but that is what it returns. That's what it is saying. After this, making only two trades with $10,000, it was able to make this amount as profit. Will be all right. So now we are done with this. We have tested this over the past 2 months over historical data. What do we do next is we want to connect to market. We want to see, okay, can we put this in real market? First of all, we need to do two things. We need to have Alpaca. Okay, you just go to Alpaca, app.alpaca. Register is also free. Once you register, you go to home. You will see, you can see here you are on paper trading. There is no real money that is being used. You can view your API keys here. So if you do not have API keys, try to generate them. It will give you three different values here: the endpoint, the key, and then the secret. Okay, so use them. Once you use them, try to save them in a notepad. Save this because you will need them later. Okay. So I told her now, okay, I want to use Alpaca API to connect to the market. Install the required library and packages, and these are my details to connect to the API. I gave it the endpoint just like you saw. And don't worry, even if you copy this one, it's fine. It's paper trading money, so it's fine. So my secret is this, and I said to test the connection, start by executing a market order on Tesla. Let the trade run for 2 minutes, then terminate. Okay, so I want to run this in Tesla, run this to make sure that my communication is set. Okay, the bridge has been built between the code and the market. We have the bridge, and to do that, I will just make an order without any strategy, just buying straight away. Okay, so that is what I did there, and yeah, as you can see, it installed Alpaca API, and then after that, it installed the library to connect with my IDs and everything, places a market order on Tesla, and then it waits for 2 minutes to terminate, as I told it. So I copied all these codes. As you can see, I started by installing Alpaca as it said, copied this one, do this one. So as I was following it along, everything was happening, and it said market order for 1 share submitted. What I did was I come here, I did this. Okay, I can run this code again, no problem, just so that everybody can see it happening. So starting from the top, okay, it installs, following the steps. Okay, Tesla, loading data. Okay, 100% done. Now I want to generate the visualization. Okay, this is the visualization. Okay, I'll run this. Okay, as I said, I don't know what the code is doing. I'm just doing what it told me to do. I will run this now. So as you can see, as I said, it did these purchases in the historical data, and then I can print the statistics. 2 trades. This was the amount that was made. Okay. Next is I install the Alpaca API. Okay, it is telling me you must restart the runtime. Okay. Yeah, sometimes if it tells you just do that, restart, no problem. You will just do everything again. It's not gonna take much time. Okay, so now everything satisfied. Okay, now I will connect with my account. Connection successful. Okay, I will buy Tesla. Okay, all right. Market order for 1 share of Tesla submitted. I can come to my Alpaca account. I will check the orders, open orders. You see it here. Time 12:16. Exactly the time I submitted this order. Okay. So connection established successfully. Next is I would like to cancel this order. was for. Okay, so I was saying to do 2 minutes. Don't worry, I reduce it to 20 seconds to speed of this. I will have removed this line of code because I got an error, but as I said, we are going to do this no code, assuming I don't know code. Okay, so I would like to show you also, if you come across errors, what should you do, assuming you don't know any code. So you don't know code, it tells you there is an error, which means bad has given you something wrong. So what I did was I just copied everything here, copied everything that was here, came to bad, and I told it when I ran the last code that terminates the order, I got this error. I pasted the error there. So you can see order ID is missing, order ID is missing, API error. I gave it this and it realized the error. Okay, this is what happened. Told me some of the ways to fix it and it gave me a corrected code. So this is the corrected code. I just copied it, went back here and pasted this corrected code. Okay, now it is working, I think. Okay, sorry, still going to wait for 2 minutes. I should have made it 20 seconds. Maybe stop. Yeah. So I would like to see if this corrected code will work now, since it didn't work earlier. So let's see what happens after the 20 seconds to submit the order. So let's see, this order was submitted just now, 12:19. Let's see, is there any order 12:19? Yes, 12:19 submitted. All of them are also open. None of them was closed. They were supposed to be closed, but none was closed. I also got an error, meaning that BAT couldn't solve the issue well at the first go. So I copied everything all the way from this, everything copied, went to BAT, told it I got an error again. I pasted everything. Now with this, it got more information and told me, okay, get the corrected code. This is the corrected code. I copied this corrected code, came back here and pasted it. Okay, then I run this corrected code again. So as you can see, it's even telling me order submitted with ID 6A0A. So I can check here. Is there? Okay, we have one that was submitted now, 12:20. And open it up. You see it here. You see this is the order. It was submitted now. It is waiting. Oh my god. Okay, it's going to still go for 120 minutes, 120 seconds. So before it finishes running this call, these orders are submitted, but none of them is fulfilled. We have not had any order that was filled, meaning that none of the orders has been, you can see here, filled quantity. None of them has been filled, but it has been accepted. Some of them have been cancelled. Those are some of the ones I worked with before. Why is it not filled? Filled means executed. So why is it not executed? Anybody can tell why this is the case? Why is it not executed? Any ideas? Yeah, so the order is not executed because the market is not yet opened. Okay, the market has to be open for the order to be filled. It's not yet time for the market to be open. That's why the order is not yet filled. So if the market is open, of course you will see these orders will be filled because we are doing a market order. We are just buying immediately. Okay, so now you can see we have submitted the order and the order terminated. Okay, so this code worked. Let's see, did the order terminate? Yes, cancelled here. Work 20, order cancelled. Worked, perfect. Okay, so we have established connection. We were able to test submitting and terminating our order. The last thing, okay, so we are done with the step 3. Now we are going to step 4, where we execute trades and make them work. Okay, so I told it thanks. Now communication is established. Next, I want to install and use a scheduler to schedule my trades every 15 minutes. That is, my candlestick should be 15 minutes candlestick, and I want to use the engulfing pattern strategy described above to enter the trade, and also I want to maintain the risk management I defined above to exit the trade. Write me the code that will run the strategy using Alpaca API. It did that for me. Wrote the code. You can look at it down, and here it told me some key points. Install the schedule library first, which is the pip install schedule. So I did that. I installed the schedule library, pip install schedule. Okay, so it is installing the schedule library. Now it is successfully installed. Then I copied this code that it gave me, came here and pasted the code. Okay, so this is the code that is going to be now automated. Every 15 minutes is going to automate, and it will be making trades for me. So I can run this and I will leave my computer. I can go and sleep, I can go and play, and it will be observing, checking for Tesla to see when the engulfing pattern strategy is going to appear. So this will keep on running forever, unless if I'm the one who stopped it, or if we were able to make if we lose our account balance, of course, then that's it. Yeah, but everything you can see is set. Of course, maybe if you cannot read the code, don't worry, but here is the code it gave me. Yeah, okay, I forget to mention here, it told me to connect to my API keys and what have you, which we already did previously with the keys that you already got from your computer. Okay, so you have your API key, you have your secret key, you have everything, put it there, and you have your bot. It will keep running, it is running, it will keep running. Now we have finished the last stage. Okay, with this we come to the Q&A session. So if you have any question, please go ahead and ask. As I said, the recording is going to be made available for those who join later or those who want to go over the material once again. We will make this recording available on our platform, and then maybe in a week you can be able to see it on YouTube on our channel. So questions?